Small cap mutual funds can add the spice or zing which we all are looking to add in our equity mutual fund portfolio, either as an investor or as a mutual fund distributor to help our client in their investment. And in this video, I'm going to dive deep into various aspects which is going to help you selecting the best or right small cap mutual funds for you or for your client. I'm going to touch upon when you should be advising a small cap fund to your client's investment portfolio. I'm going to discuss with you what are the nuances which you need to consider when you are suggesting any small cap mutual fund for your client. And then I'm going to tell you what you need to do once you have given a small cap fund to your client. Hello everyone, I'm Shobhit. I'm a FinBiz growth expert and founder of FinBiz Growth Club. We are an aspiring community of new age mutual fund distributors who are determined to change how India invests. So first, let's talk about some fundamental aspects as when you should be giving a small cap mutual fund to your client, or whether you should give a small cap fund to your client or not as a mutual fund distributor. So the first and most important thing which we need to understand is how financially literate my client is in their investment journey. This means what? We need to understand that small cap funds can give you that alpha or the additional return which we are looking from our equity mutual fund portfolio. But we need to also remember that extra returns are corresponding to the extra risk. We need to understand the risk profile of a client. We need to understand whether my client is prepared to walk that volatility or not. So for that, you need to understand his investment history, what kind of asset class, what kind of vehicles in which he has been investing, whether he has sufficiently low volatile equity assets in his portfolio or not, like a large cap fund or a multi-cap fund, because those are going to be a low hanging fruit once you are going to give equity investments to your client. And once you are sufficiently aware that your client has a sufficiently diversified equity portfolio in terms of a large cap fund or a multi-cap fund, then only you should be looking to diversify your client portfolio into a small cap fund. Please understand, your small cap fund cannot be the first choice for your client when you are advising an equity investment for him. At the same time, you need to be aware that whenever you are building a portfolio and you want to give a small cap, before that we need to be mindful of the fact that your client portfolio should be diversified not only in terms of schemes but in terms of assets as well. So your client should have equity investment, your client should have debt investments, gold investments. Depending upon his investment horizon and the portfolio size, you need to first sufficiently diversify your portfolio or your client's portfolio into multi-assets before giving a risky investments like small cap equity funds. And once you are having a sufficient time to understand the portfolio which your client has, the financial literacy he has, then you should be diving into suggesting a small cap equity mutual funds to your client. So when you are going to give, I think I have made ample clear. Now let's talk about what are the various factors which we need to consider as a mutual fund distributor when we are advising equity mutual funds to our client. So the first and fundamental aspect which we need to understand is what is the investment universe in which a small cap fund is going to invest. And here I want to share with you some interesting insights. Now, please understand, after the recent guideline by the SEBI as what could be the universe for a large cap fund or a mid cap fund or a small cap fund, the universe of all the stocks has been segregated into these three categories. So the first 100 stocks according to the market capitalizations are being kept as a large cap. The next 150 is being kept as a mid cap, and rest all the stocks according to market capitalization is being put into small cap. So the understanding which you need to have is beyond the 100 stock in large cap and rest 150 stock in mid cap, most of the stocks are into small cap. So let's assume that in NSE there are more than 5,000 stocks which has been listed. After 250, all the stocks are into small cap space. This means what? There is a huge universe in which a fund manager has an opportunity to pick up the gem. So if you think that, or if you are able to understand that this universe is very huge, the first thing which we need to understand is whenever you are picking a small cap equity mutual fund for your client, you need to be aware that whether the fund house as well as the fund manager has the capability and the resources to pick out the gem from such a large universe. So the pedigree of fund house is going to be playing a very, very vital role, because if they don't have enough bigger team to look into each and every aspect and pick the gem from this universe, it would be a very difficult task and they may not be able to deliver. The other thing is you need to also touch upon the pedigree of the fund manager in terms of the time he has spent in the fund management, and especially into the small cap space, because the universe itself is a very, very large. So I hope I am making myself clear that what should be your priority when you are picking a small cap fund for your client. Once you are clear on that, I want to dive into another important aspect. The second aspect which you need to be touching upon is to understand the performance in terms of rolling returns. Okay, rolling returns are going to be playing a very, very vital role to make your client give a right small cap fund for their portfolio. Now, first let's understand what is rolling return. Now, most of the advertisement which you see in media, there the performance is given as a point to point. Now, what point to point means? When suppose today you are seeing a performance of last 1 year or 3 years, so they are going to take NAV of today, and then they are going to take NAV 3 years back or 1 year back, and these two data points they are going to take and then calculate the performance. Now, the problem with this point-to-point return is whatever happens in between the period, we are not aware of. And the more important question which we as an advisor need to ask is whether my client is only going to invest in this point of time at that particular date. And more often than not, it is not going to happen. So the better way to judge the performance of equity mutual fund scheme, and for the small cap in general in particular, is to understand the performance in terms of rolling return. Now, rolling return is nothing but the average return over a period of time. They are not going to take only between the two dates. They are going to take an average among the time period. So if I am talking about 3-year rolling return, they are going to be taking a 3 years average. Now, this is going to be much better way to judge the performance of an equity mutual fund scheme, and especially for a small cap fund perspective. Just to give you a insight, let's assume there is a batsman who has hit, say, 200 runs in a inning, and in rest of the 4 innings he has not scored even a single run. So what is the average for the 4 innings? It is 50 runs. But if a batsman is there who is going to be consistently achieving 50 plus scores in 4 innings, his average is also going to be 50. But from the top down view, if you are going to look, both are going to give you a 50 run average score. But the real story is the second batsman is going to be much more consistent, and our endeavor should be to pick that kind of a batsman. Same way, when you are going to be picking a scheme, especially from the equity point of view, rolling return should be your top priority. So I have shortlisted some of the scheme performance in terms of rolling return, and I want to discuss with you what kind of insights you should be drawing from those investments and those performance. So if you look at the screenshot which I have taken, here you are going to see some stats, and I'm going to discuss with you some of the stats so that you have better understanding. Now, if you look at the return stats here, the attention which I want to draw your to is to look at the maximum return. Now, the Kotak small cap has given a maximum return of 37%, Nippon has given 37%, SBI 32%, and Axis small cap on 35%. Now, from the broader point of view, if you look at it, you will draw a conclusion that Nippon Small Cap Fund has been performing given the maximum return at any point of time on average. But what we need to remember, if I am going to be investing in a small cap fund, my time horizon should be anywhere between 5 years and plus. In this performance, I have taken a 3 years performance, but if you are only going to look at that, it will not serve your purpose. The rolling return perspective, which you are going to see on the right hand side, the return distribution, there you are going to find that Nippon has given negative returns or 0 to 8% return for the 16.97% of time. So this is a 3 years distribution which we are seeing. In this 3 years distribution, 16.97% of time, the Nippon small cap fund has given 0 to 8% return. Whereas if you look at Axis Mutual Fund small cap fund, it has given from between 0 to 8% return only by 1.48% of time. Now, if you are looking for a consistent performer in a small cap category, the obvious choice should be Axis Small Cap, where the lower performance is restricted to a very small period of time compared to a Nippon small cap fund, where the 0 to 8% performance has been for 16.9% of time. Same way, if you look at the return which the fund has delivered more than 20% for a consideration of the time period. Here in Axis Mutual Fund, you are going to find that it has delivered more than 20% of the return for 68.2% of the time, whereas Nippon has given for 59.78% of time. So this kind of insights you need to remember if you are looking to select a fund which is going to be consistent over a longer period of time. It is going to serve your purpose well, and that's what you need to be reading from these numbers, how volatile their performance are, what kind of insights which you need to be drawing. If you look at the negative returns as well, Nippon has given negative returns for 3.69% of the time, and your Axis Small has not given even a single time negative return. So these kinds of inputs are really going to help you in picking the gem from the small cap space, which most of us are not discussing about. Now here also I want to draw your attention. If you are looking for a lump sum investment, then Axis Small Cap should be the first preference, because the volatility is low and you are going to get a consistent top-drop performance. But if you are looking for allocation through a systematic route, then Nippon Small Cap Fund will make much more sense, because it has been up and down in its performance, and any investment or any scheme which is having a lot higher volatility is going to serve you well if you are going for a systematic investment route. So I hope you guys are able to understand that what kind of insights we should be looking at from the technical point of view, so that you are going to be picking the gem. The second thing which I want to be drawing your attention to, look into the risk reward ratio which these portfolios are able to generate. Now, as I told you, universe is very huge. You can pick from any number of stocks, or you can pick any stocks, since the universe has been such large. But the real test for a fund manager is how they are going to be reducing the risk and generating that additional return. And for that, the ratio which you need to track is called Sharpe ratio. Sharpe ratio is nothing but going to tell you what kind of returns or additional return the fund manager is able to generate taking per unit of risk. And if you look at some of the schemes screenshot which I have taken, you are going to find that Quant Small Cap, Canara Robeco, Union Small, they are able to generate much better Sharpe ratio, or the much better return per unit of risk compared to the other funds. So this is also one of the criteria which you should be considering actively, the Sharpe ratios, when you are selecting a small cap fund, because inherently small caps are going to have a very high risk. So if I am taking a high risk, I would love to know what kind of additional returns my fund manager and the portfolio is able to generate over a longer period of time. So this is also number you need to track, and I think once you are able to track these kinds of insights, you will be able to select the right small cap fund to your client. And once you have advised your client the small cap fund, then what should be the after investment strategy which you as a mutual fund distributor should follow? So the first thing which you need to understand is, since these investments are going to be very volatile, the monitoring which we need to be doing should be very, very timely, if I may say. So you need to be making sure that every quarter, every half yearly, every yearly, you should be monitoring their performance, and you should be actively taking a call how long you should be observing their performance to take a corrective action. So this insights you need to be remembering, because small cap funds being a very volatile asset or a risky asset, in case of layman language, you need to understand that monitoring has to be done on a more frequent basis. So I hope I have given you some food of thought, some line of actions which will open a new dimension for you whenever you are going to be suggesting a small cap equity mutual fund to your client. Where you are going to observe the rolling returns or the Sharpe ratios, I am going to share the resource free link in the description box. I want you guys to please explore those information, go through the insights, so that you can always suggest the right small cap fund to your client. In case you love the content, I would love you guys to hit that subscribe button, give us a thumbs up, so that whenever we have something new to offer, you guys will be the first one to know. Thanks for watching, and I'm going to see you next time.